exemption. So firstly, we should know the meaning of tax exemption. Various tax systems grant a tax exemption to certain organizations, persons, income, property or other items taxable under the system. Tax exemption may also refer to a personal allowance or specific monetary exemption, which may be claimed by an individual to reduce taxable income under some systems. Tax-exempt status may provide a potential taxpayer complete relief from tax, tax at a reduced rate, or tax on only a portion of the items subject to tax. Examples include exemption of charitable organizations from property taxes and income taxes, exemptions provided to veterans, and exemptions under cross-border or multi-jurisdictional principles. Tax exemption generally refers to a statutory exception to a general rule rather than the mere absence of taxation in particular circumstances, that is, an exclusion. Tax exemption also generally refers to removal from taxation of a particular item or class rather than a reduction of taxable items by way of deduction of other items, that is, deduction. Tax exemptions may theoretically be granted at any government level that imposes taxation, though in some broader systems, restraints are imposed on such exemptions by lower-tier government units. After studying this lesson, you should be able to incomes exempt from tax. Now let's discuss incomes which are exempted for tax payment. It can be studied under heads: incomes which are not to be included in the income without any further consideration, and incomes which are not to be included in the income on satisfaction of some further condition or conditions. The incomes enumerated below are exempt from tax. They are agricultural income, Section 10, Part 1. This income has to be considered for determining the rate of tax applicable to the other income. Any sum received by an individual as a member of a Hindu undivided family from income of the family or from the income of the impartible estate of the family, Section 10, Part 2. Share of profit of a person from a firm which is separately assessed and where he is a partner. Any receipts which are of casual and non-recurring nature. Any payment made under the Bhopal gas leak disaster. Any scholarship granted to meet the cost of education, Section 10, Part 16. Interest by the central government or any state government or by any other body approved by the central government in this behalf, Section 10, 17A. Annual value of one palace occupied by a former ruler, Section 10, 19A. Income of a local authority under the heads income from house property, capital gains, income from other sources, or income from supply of commodity or service within its jurisdiction, or income from supply of water or electricity in its jurisdiction or outside its jurisdiction, Section 10, 20. Any income of an authority constituted under a law for satisfying the housing need or for planning, development or improvement of cities, towns or villages, Section 10, Part 20A. Any income of an authority established in a state, whether known as Khadi and Village Industries Board or by any other name of the development of Khadi and village industries in the state, Section 1023BB. Any income by the way of property income and income from other sources of a registered trade union or an association or registered trade unions, Section 10, Part 24. Income in the form of interest on securities or the capital gains on transfer of the securities received by a person on behalf of a statutory provident fund, or any income received on behalf of recognized provident fund, approved superannuation fund, approved gratuity fund, etc. Section 10, Part 25. Income of employees' state insurance fund, Section 10, 25A. Any income of a corporation established by the central government or any state government for promoting the interests of the members of a minority community. The incomes enumerated below are exempt from tax subject to fulfillment of certain conditions. They are any interest received by a non-resident from specified securities or bonds, and any income received as premium on redemption of such bonds. Any interest received by an individual on money standing to his credit in a non-resident external account maintained by him with any bank in India in accordance with the Foreign Exchange Regulation Act, Section 10(4)(I). Any interest from notified saving certificates received by an Indian citizen or an individual of Indian origin being a non-resident. The value of leave travel concession provided to an individual and his family by an employer or a former employer in connection with his proceeding on leave to any place in India. Section 10(5). Any tax paid by the employer of an individual being a non-resident technician for a period of 48 months. Section 10(5)(b). Any passage monies or the value of concessional passage received by a foreign national from his employer for himself, spouse, and children from proceeding outside India on leave. 10(6)(I). Any remuneration received by a foreign diplomat or a member of his staff. Section 10(6)(2). Remuneration received by a foreign citizen as an employee of a foreign enterprise if his stay in India does not exceed 90 days. Section 10(6)(6). Any tax paid on behalf of a foreign company on income by the way of royalty or fees for technical services. Section 10(6)(a). Any tax paid on behalf of a non-resident or a foreign company by the Government of India concerned on income under an approved agreement. Section 10(6)(b). Any tax payable on behalf of a foreign state or a foreign enterprise in respect of the dry lease of an aircraft under an approved agreement. Section 10(6)(b)(b). Income arising to specified foreign companies from services provided in or outside India in respect of projects connected with the security of India. Section 10(6)(c). Any allowance or perquisites granted by the Government of India to its employees rendering services outside India. Section 10(7). Any sum received as death cum retirement gratuity as prescribed. Section 10(10). Any payment in commutation of pension subject to the limits specified. Section 10(10)(a). Any payment as leave encashment in respect of earned leave paid to the retiring employees. Section 10(10)(a). Any amount received as retrenchment compensation by a workman under the Industrial Disputes Act. Section 10(10)(b). Any amount by way of compensation received from a public sector company at the time of voluntary retirement not exceeding ₹5 lakhs. Section 10(10)(c). House rent allowance subject to certain limits. Section 10(13)(a). Special allowance or benefit granted to an employee to meet expenses incurred wholly and exclusively in performance of the duty. Section 10(14). Any income received by a public financial institution as exchange rise premium in certain cases. Section 10(14)(a). Any interest from or premium received on redemption of certain exempted securities. Section 10(15). Any income by way of daily allowance or constituency allowance received as a member of Parliament or state legislature, and any other allowance not exceeding rupees 600 per month. Section 10(17). Any income of an approved scientific research association. Section 10(21). Any income of a notified news agency. Section 10(22)(b). Any income of an approved sports association. Section 10(23). Any income other than income from property or income received for rendering any specific service or income by the way of interest or dividends of professional bodies approved by the central government. Any income received by a person on behalf of any regimental fund or non-public fund established by the armed forces of the Union for the welfare of the past and present members of such forces or their dependents. Section 10(23)(a). Any income of a fund established for welfare of employees. Section 10(23)(aa)(a). Any income of pension fund set up by LIC. Section 10(23)(aa)(b). Any income of a public charitable trust or a registered society approved by Khadi and Village Industries Commission, existing solely for the development of Khadi or village industries. Any income of anybody or authority established, constituted or appointed under any statute for the purpose of administration of public, religious or charitable trusts or endowments or societies for religious or charitable purpose. Section 10(23)(bb)(a). Any income of the European Economic Community derived in India by the way of interest, dividends or capital gains from specified investments. Section 10(23)(bb)(b). Any income of SAARC Fund for regional projects set up under the Colombo Declaration. Section 10(23)(bb)(c). Now let's discuss Section 80C deductions. The government encourages certain types of savings, mostly long-term savings for your retirement, and therefore offers you tax breaks on such savings. Section 80C of the Income Tax Act is the section that deals with these tax breaks. It provides certain breaks for one's income that gets reduced by this investment amount and one has to pay no tax on it at all. This benefit is available to everyone irrespective of their income levels. Provident Fund, PF. The payments that you make to your PF are counted towards Section 80C investments. For most of you who are salaried, this amount gets automatically deducted from your salary every month. Thus, it's not just compulsory savings for your future, but also immediate tax savings. Voluntary Provident Fund, VPF. If you increase your PF contribution over and above the statutory limit, even this amount qualifies for deduction under Section 80C. Public Provident Fund, PPF. If you have a PPF account and invest in it, that amount can be included in Section 80C deduction. The minimum and maximum allowed investments in PPF are Rs 500 and Rs 70,000 per year respectively. Life insurance premiums. Any amount that you pay towards life insurance premium for yourself, your spouse or your children can also be included in Section 80C deduction. Please note that life insurance premium paid by you for your parents, father, mother or both, or your in-laws is not eligible for deduction under Section 80C. If you are paying premium for more than one insurance policy, all the premiums can be included. It is not necessary to have the insurance policy from Life Insurance Corporation, LIC. Even insurance bought from private players can be considered here. Equity Linked Savings Scheme, ELSS. There are some mutual funds schemes specially created for offering you tax savings, and these are called Equity Linked Savings Scheme or ELSS. The investments that you make in ELSS are eligible for deduction under Section 80C. Home Loan Principal Repayment. The equated monthly installment EMI that you pay every month to repay your home loan consists of two components, principal and interest. The principal component of the EMI qualifies for deduction under Section 80C. Stamp duty and registration charges for a home. The amount you pay as stamp duty when you buy a house and the amount you pay for the registration of the documents of the house can be claimed as deduction under Section 80C in the year of purchase of the house. National Savings Certificate (NSC). The amount that you invest in National Savings Certificate can be included in Section 80C deductions. Infrastructure bonds. These are also popularly called infra bonds. These are issued by infrastructure companies and not the government. The amount that you invest in these bonds can also be included in Section 80C deductions. Pension funds. Section 80CCC. This section, Section 80CCC, stipulates that an investment in pension funds is eligible for deduction from your income. Section 80CCC investment limit is clubbed with the limit of Section 80C. It means that the total deduction available for 80CCC and 80C is Rs 1 lakh. Bank fixed deposits. This is a newly introduced investment class under Section 80C. Bank fixed deposits, also called term deposits, having a maturity of 5 years or more can be included in your Section 80C investment. Senior Citizen Savings Scheme (SCSS). SCSS is a deposit scheme specially meant for elderly citizens. Post Office Time Deposit Account. This is a fixed or term deposit offered by the Department of Post, Government of India, through the post offices in India. If the time deposit is opened for a duration of 5 years or more, the amount invested is qualified for deduction under Section 80C. Others. Apart from the major avenues listed above, there are some other things like children's education expense for which you need receipts that can be claimed as deductions under Section 80C. Now let us check if you have understood the various concepts discussed in this lesson clearly. Agriculture income, as per Section 10(1), is the income enumerated below are exempt from tax. Right or wrong? Right. Tax exemption refers to a personal allowance or specific monetary exemption which may be claimed by an individual to reduce taxable income under some system. Right or wrong? Right. Tax exemption generally refers to reduction of taxable items by way of deduction of other items rather than a removal from taxation of a particular item or class. Right or wrong? Wrong. Now let's revise what we have studied till now. While deduction is available from gross total income, exemptions are not included in gross total income. Indian agricultural income is exempt from tax by virtue of Section 10(1). Agricultural income from a foreign country is treated as non-agricultural income in India. Though every income is taxable under the income tax law, whether it is received in cash or in kind, whether it is capital or revenue income, but still some incomes are given exemption from tax. Some important incomes that are exempted from income tax include agricultural income, income of minor, family pension, leave travel commission, and dividend income.